Welcome back to Invincibles, everyone. So again, going over my daily plan on exactly how I plan on playing into the SPY. Again, we are leading into FOMC Fed minutes on Wednesday, and then we have CPI coming out on Thursday. In my opinion, we want to see CPI below 8.0. Now, again, we have been talking about our Elliott waves. Again, looking at our first wave and coming out with our second wave and our third, and now sitting on our fourth wave that we mentioned from yesterday that we have confirmed. Looking for that continuation on lower. Again, leading into CPI, we very much could bounce back, possibly look for that reversal if, again, we do get a large decrease in CPI, which very much could happen at this point. We're not exactly sure what CPI will come out as, but again, looking for the better play is exactly what we're going to be looking for. So again, you could play CPI to the upside if you believe that CPI is going to be better than worse, possibly a lot lower than 8.0, then you could play this, of course. But if we are looking for confirmation, we want to see the Feds listen to that CPI. We wanted to see that they mentioned possibly a decrease in rates. We are going to be looking for that confirmation, and we very much will know exactly when that does happen, when we get that confirmation. However, as you guys can see, sitting on our possible fifth wave to come, looking for that possible reversal if we do hit our fifth wave is exactly what we're going to be looking for if we do continue on lower. I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Invincibles, and again, we mention any breakout that is worth looking at throughout the day, go to Invincibles.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, again, pretty simple, guys. Again, leading into CPI on Thursday, we want to see a CPI below 8.0. That would be very bullish for the Feds to possibly and only possibly have a Fed pivot. Today, Cathie Woods actually did send a letter to the Feds mentioning that deflation is very much a risk if they continue to raise rates. So again, they may need to forcefully stop raising rates at some point. We're not exactly sure when, but again, keeping an eye on CPI would be a possible indication of that possible decrease in rates, which in my opinion, the market would very much bounce back, and that will be the bottom. Even though we do sit on a fourth wave here and very much following our indicators here, we very much still can possibly bounce back since CPI is more important to the market than these indicators will be for sure. And looking for that confirmation, again, getting a retest would be very key to make sure we get confirmation on that continuation on higher would be extremely key. Again, looking for confirmation is extremely key. If the Feds do not listen, and leading into early November's rate hike, they do not listen to CPI on a possible decrease in CPI going into Thursday, then the market, in my opinion, can definitely continue on lower and not get that confirmation possibly, and possibly get that fifth wave, and then we would be looking for that reversal from there. So again, that would be that move to the downside if the Feds did not listen to CPI. Now, looking at our overall strength here on the MACD, as you guys can see, again, we do have that decrease in buy pressure that we mentioned from yesterday with our white shaded line coming in, again, assuming that it was high risk to play to the upside. And as you guys can see, with our second white shaded line coming in, we could continue on with that decrease in buy pressure. What we will be looking for is for that increase in buy pressure breaking above our prior buy pressure point that we had for that increase in momentum. That's what we're looking for here. And looking at our EME lines, as you guys can see, we are not crossing down yet, so we do not have that overall strength to the downside. Very much, in my opinion, setting up for what CPI may be. Very much going to predicate exactly what CPI comes out as, in my opinion, as far as where these EME lines do continue. Even if we continue on lower going into tomorrow, we can easily cross back up if CPI does come out a lot lower than we expect. And again, we don't know exactly what will happen. Our prior CPI was at 8.3. Our prior expectation was at 8.1. So we're looking to see if we do get below 8.0 for that possible bounce back. Our EME lines are very key here to see if we do continue on higher with that increase in buy pressure. And looking at the RSI, this gives us justification for why CPI has a chance to continue on higher is because we are also sitting on divergence. Again, as you guys can see, we do have our divergence, higher lows as we are oversold, as we had lower highs here on our price action, getting that divergent move. So again, if CPI comes out a lot lower than expected and we do have a major bounce back here on our RSI, we will be justifying this as divergence that did come out, and that's exactly what will happen here. So again, very much setting up for a major move up or a possible major continuation on lower. Again, sitting on divergence with possible momentum to the upside as we sit on our correctionary stage, testing lows of the year, very much within that indecisive point going into tomorrow. I definitely just would be careful. We're going to see a lot of volatility, in my opinion, going into tomorrow, and definitely Wednesday again with FOMC Fed minutes. We're going to see exactly what the Feds have to say. We're going to look for what they mentioned about possible Fed hikes in the future, what it would possibly take take for the Feds to possibly decrease in Fed rate hikes. That's going to be very key. So again, keeping an eye on that FOMC meeting going into tomorrow and how exactly their tone is. It's going to be very key on what we're thinking next on what our momentum may be next here in the market. So again, just keeping an eye on that. And again, with CPI, looking to see if we do get below 8.0 for that possible strength here in the market. We'll see exactly how this plays out again with our 20 crossing and still curling down below our 50. We need to make sure we are careful if we are looking for that bullish momentum. Ultimately, we do need to start respecting our 20. And ultimately, before we do continue on higher on any major strength, we definitely will have our 20 curling up. As you guys can see, our 20 is not curling up at this point. So again, making sure we are careful as we could continue on with rejections on our 20. Maybe we have a slight bounce going into tomorrow, and then CPI isn't exactly what we're looking for, and then we possibly continue on lower again with that rejection on our 20. Now looking at our weekly chart, as you guys can see, our EMA lines are not pointing up yet, but if we do start to curl here and we start to point back up and we do get that cross back above our 26 EMA on our weekly chart, then we could continue on with pressure to the upside. So keeping an eye on our EMA lines on our weekly chart, very key as we are approaching our 200 weekly moving average, very key, because if we do get them to cross, maybe we get a momentum candle to the downside and we get a possible doji candle coming out, and then we look for a possible morning star with the momentum candle closing above our doji candle here, giving us that morning star for that possible continuation on higher short term, and then the Feds, of course, continuing on higher from there. If we do have better data from there, that would be a possible move. So again, keeping an eye on our 200 weekly day moving average, very key, as we do have our EMA lines again crossing down, still above our previous point where we did curl up and did cross. So again, if we curl up here, that could be justified as a possible divergent move here on the weekly. So again, keeping an eye on that as a possible bottom or a possible bounce back short term. And again, lastly, going over the VIX here, as you guys can see, we did have that break intraday above our previous highs. And again, having that break that we mentioned in the Instabills room, as you guys can see, we did have a pullback, as we did have Russia mentioning that they're open to diplomacy. So again, we did get a spike in the market. We got a pullback intraday. So we are now testing our previous highs on the daily chart. So again, we are testing, again, mentioning our engulfing candle the other day, because again, we did respect our VIX on our 20-day moving average. Now having that momentum candle to the upside, looking to see if we do continue on with that strength. Again, very much going to predicate exactly what happens with CPI. We are testing our 200 weekly day moving average on the VIX here. So we are looking for a possible setup above our 200 weekly day moving average if we are continuing on higher here on the VIX. So again, very much testing resistance. The market very much setting up for exactly what CPI may be and what the Feds may have to say going into Wednesday. Most runners will be pre-market news and out the gate. Again, if you guys are looking for major breakouts that we mention every single day in the Instabills room, again, we mention every single breakout that is worth looking at throughout the day. Go to instabills.com in the description below, and you will never miss a breakout alert today again. And again, all of you Instabills that come over every single day and support the channel, I appreciate you guys. Truly, I really do appreciate you guys. We're going to continue to go at it and let the play come to us here. Again, we are leading into CPI. We'll see exactly what CPI comes out as. It'll be interesting exactly how the Feds respond. If we do get a better CPI than expected, that would be awesome, because then the Feds now are pressured to have a possible decrease in rates. So it'll be interesting leading into CPI and how the Feds do respond. But again, I appreciate you guys truly for coming over and supporting the channel every single day. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.